Good morning, everyone. Thanks for starting your day with us. This is The Market. I'm Avan Dabash, and joining me is Anisha Jain. And yes, indeed, the recovery on D Street is pretty evident. So let's just start off the show by giving you a sense as to how things transpired in yesterday's trading session. It continues to remain very heavy on earnings, but you had the index at least breaking out of that very dull, quiet range that we've been confined to over the past multiple weeks, and finally above the 17,700 mark in trade. And I think that all the credit really goes to those heavyweights in trade, because they did a lot of the heavy lifting. So names like ICICI Bank, you had Ultratech Cement, HDFC, for instance, the entire HDFC cluster of stocks, as well as something like Hindalco, JSW Steel, Reliance Industries, not to mention, they were all at the forefront in yesterday's trade. So yes, it seems like with the kind of rollover data on the Nifty Bank at about 28% and on the Nifty at about 22%, that short covering trend is pretty evident in the markets, and that the next resistance level stands at about 17,900 on the frontline index. When it comes to the Nifty Bank as well, the resistance levels close to 43,000 is what we're looking at, and a support at close to 42,300 on the Nifty Bank index. In terms of the kind of liquidity that we've been facing over the past many days, the FII sell figure, well, that doesn't seem to have abated. So yesterday as well, we did go in with a sell figure, or minute as it may be, the FIIs continue, Anisha, to remain net sellers.
Oh, well, yes, but as you pointed out, the key talking point in the market is the fact that it's a very, very earnings-heavy week. As we were pointing out earlier, 18% of the Nifty reports its earnings. And for today itself, you have Bajaj Auto, and then you have the FMCG majors like Tata Consumer as well as Nestle that will come out with earnings. Let me quickly talk about Bajaj Auto first. The stock is sitting at 52-week high levels. Sequentially, it is expected there is going to be a decline because the volumes of exports has been a bit tepid. But if you look at the revenue profile, it's expected to dip almost 10% on a sequential basis. EBITDA margin will really hold the key, so let's watch out for that number. If it comes around that 18.7% mark, that should be okay for the street, but anything below 18.5% might worry the street. And then the profitability is expected to dip by around 5%, but the commentary regarding margins going forward as well as new launches will really hold the key. For Tata Consumers, the stock was definitely quite excited ahead of its earnings today, so stock was up 4% yesterday. The street is penciling in a growth of almost 10 to 11% as far as top line is concerned, and the double-digit growth is likely to be led by the India business, so that will really hold the key. Shifting focus to Nestle as well, the expectations continue to be a bit tepid in the sense that revenue is expected to jump up by around 11%, but again the margin picture will be important, because if the margin comes around that 26% mark, that will be good. For 22.6% mark, that will be okay, but anything below 22% will not be taken well, because remember, inflationary pressure has been high, but the street is talking about how the worst is over, and we are watching out for those indications in the financials as well, that the inflation is up, or rather the worst of inflation is over. Volume growth seen at around 3 to 4%, so lots to watch out for. And of course, there is also a lot of action in the primary market as well. Mankind IPO, one of the large ones in recent times, opens today.
Absolutely. So all eyes on that. Remember, it's opening for subscription, and the issue is worth close to 4,326 crore rupees. It's going to remain for bidding, open for bidding. This is going to be until the 27th of April. Remember, they have over 36 brands, Manforce, Prega News, and the IPO price band. There you have it on your screens, 1,026 to 1,080 per equity share. Remember, it's a complete OFS in nature. It did make its debut in the grey market before hitting the primary market, and of course we'll be watching out for that very closely. So that's Mankind Pharma for you. You do have the promoters, who are Ramesh and Rajiv Janeja. They are selling close to 1 crore shares, and now the promoter holding in the company is going to reduce to 76% post the issue, with investors selling close to 3 crore shares, or about 3,245 crores in terms of value. So it's a domestic business, and it's the second largest, incidentally, in terms of its volumes as well for FY22, operating primarily in pharma as well as healthcare products. In terms of financials as well, then for FY22, revenues stood at about 7,718 crores, with margins at about 25.8%. They have short-term debt of about 850 crores. But let's also just take a quick check-in as to how the global markets have shaped up overnight and the kind of handover that we have from Wall Street as well as from Asia. Well, it's safe to say that it was a fairly tempered session. You had tech-heavy Nasdaq that slipped about 0.2%. The Dow Jones was in the green, but very mildly, nothing to really shout home about, and ditto for the S&P 500. Today, I think all the attention is going to be on a lot of the tech-heavy names like Alphabet, Microsoft, Amazon, Meta, all set to announce their quarterly numbers. So we're waiting those tech earnings today. And you've got the Asian markets as well, largely lower, pretty much taking cues from Wall Street, barring the Nikkei. They are under pressure primarily in trade. And the SGX Nifty, yet again, indicating, Anisha, a pretty flat start around the 17,778 mark today.
Oh, well, yes, a lot of earnings to track globally as well, but then the commentary will also be important because come next week, there is the US Fed meeting on February 3rd, or rather May 3rd, and the expectation is that 90% of the people are expecting there is going to be a rate hike. But what are the other commentary coming in from people across the globe? Let's go across to my colleague Ankita to find out just that. Hi, Ankita.
Good morning to you, Anisha and Avan. Yes, let's quickly look at the global commentary that's coming in. First up is Mohammed Al-Aryan, who says that even though the equity markets are really coming, it is the bond markets that is really confusing for now. He says that the bond market recognizes that there is a lot of uncertainty and you don't want to commit fully to the equity markets until we really figure out things that we do not know. So that's the word coming in from Mohammed Al-Aryan. And let's go across to what's happening in the European markets. Now, we all know that the ECB is going to come out with its rate hike policy on the 4th of May, and the market is penciling in 25 basis rate hike as opposed to a 50 bips rate hike. On the back of that, the ECB's Governor Council member and Bank of France head Francis Villeroy said that there may be a need for more rate hikes, and ECB will hold the rates at the peak for as long as it is needed. The underlying inflation risk being more persistent, rate hikes should be limited in size and in number. And also commenting on the same, we had Irish ECB policymaker Gabriel McLaugh, who also said that it is too early for ECB, to start planning a pause in the monetary policy tightening. So that's the word coming in from ECB a week before their policy meet on the 4th of May. Now let's look at back home in Asia. Bank of Japan chief says that he wants a strong inflation before tweaking the yield control policy. BOG governor said that the central bank's inflation forecast must be quite strong and close to a good 2% in the coming year to consider tweaking the yield curve control. Now, as of now, at present, the trend inflation is below 2%. So they must maintain a monetary easing. But when the trend inflation is projected to reach 2%, the BOJ must normalize the monetary policy. That's what the governor had to say.
Okay, Ankita, thank you so much for bringing on board all the important commentary coming in from people across the world. But now let's talk about back home and what is happening in the oil and energy space. Rahul Chadha, Chief Investment Officer at Mirae Asset Global Investment, states that Reliance Energy looks very promising at this point of time, and he talked about his other sector bets as well.
Clearly, oil between 75 to 90 is good for India. And what one hears is at the margin, though OPEC's cut supplies, but there are additional supplies coming from Russia, which are not being adequately documented for which is where the world's kind of stocked with oil. The Chinese have stocked a lot of oil, so which is to India's advantage that oil today is not at 125 but $85-90. And then when we look at stocks, look, clearly Reliance is promising, but what market fancies much more than the oils and the chemical story is the retail story, the telecom story. Things got a bit slow recently, but I think there's a longer term potential over there and a very strong longer term potential. And in the coming years, as you see IPO of some of these companies, there's going to be even more excitement about the name. We saw the sales DLF did in Gurgaon, and it was phenomenal what they did in terms of the property which was sold. And if I'm not mistaken, the average ticket size there was about 7 crores. So this is what happens when kind of the pent-up demand wakes up, basically. So for 8 years, nothing happened in the real estate market in India, whereas elsewhere in the world, there was a big real estate boom between, let's say, 2015 to 2022, etc. And now it's reversing. That post-COVID people realize they need bigger homes, and property prices are moving up, which is what forcing people to act. So some of these names are promising. Post COVID, we were a bit early in the names, and we built a sizable exposure in the real estate names. Though recently, or last 6 9 months, we pruned the position because RBI was hiking rates. But look, this is a good time to add these names from a 2 3 year perspective.
All right, lots lined up on the show, but let's bring on board then our technical guests to discuss the levels and, of course, their top recommendations. We've got Kunal Bothra in our studios as well as Nooresh Marani joining in. Kunal, we were just talking about that kind of breakout that we witnessed. Yes, the short covering rally is evident, and yesterday we managed to surpass that hurdle of 17,700. Is this a sign of a decisive move on the upside, or are we still going to be in a range?
Good morning, Avan. So I think after one week of price correction or retracement, we managed to make a good comeback on just a single day. So we've managed to retrace almost 200 points on the Nifty from 17,850. We fell down to almost 17,600 and below. And yesterday we managed to recover more than 50% of the range or the correction for the indices, and that's an interesting sign for the index that the bounce is much more stronger as compared to the corrections which are a bit more shallow. Now, yesterday's index movement was purely on the back of what happened with the bank Nifty and the kind of moves which we saw across the banking stocks, both the large caps as well as the mid cap end of the banking names. And I think that's the sign of confidence for the markets. Bank Nifty moving up higher generally is an indication that the trend is here to sustain. So my sense is that this up move could continue for the index. 17,850, which was the previous swing high almost a couple of weeks back. That's the near-term target which I would eye on the index, and the range on the or the support on the downside would be closer to 17,550.
Okay, so 17,850, which was the swing high, something that Kunal is watching out for. What about you, Nooresh? And specifically on Bank Nifty, managed to show quite a bit of outperformance yesterday. Do you think that trend will sustain?
So yesterday was a strong move for the Bank Nifty, given that a lot of stocks have started breaking out in the bank space. So we are seeing a good move in SBI, which was waiting for quite some time. We've seen a similar move in Axis Bank, which is coming out of a range. Now it's only HDFC Bank, which is really the stock which is yet to break out into a new high above that 1700 mark. ICICI Bank is showing momentum. So overall, now Bank Nifty has given a short-term breakout. Recent swing highs being crossed. It opens up a move all the way to 44,000 also in this leg itself. So it becomes a buy on dips going forward after this fresh breakout. So banks, I would expect some more result reactions to be positive going forward. So overall, looking at buy on dips on Bank Nifty and an upside of 44,000 till the time we hold 42,000 levels.
Okay, let's find out what the stock-specific strategies are from our chartists. And Kunal, let's start off with you.
So I'll go with PSUs. Of course, banking stocks. The first one would be Bank of Baroda. That's a stock which looks extremely interesting. In fact, Bank of Baroda did quite well yesterday. Was not one of the top performers from the PSU banking stocks, but then the breakout above 180 mark is something which is interesting into the near-term charts for the stock. So buy targets of 188. Stop loss could be kept at 176. And the second would be a buy on Coal India. This comes as an interesting bet because the stock is now on the verge of a swing breakout about the 232 mark. So I think it just closed marginally below those levels. but I would believe the momentum should pick up for Coal India going forward. Buy with a target of 240, stop loss at 227.
Interesting that you're picking up Bank of Baroda, because there's today a report as well in the ET paper wherein they say large overseas private equity firms such as Carlyle Group, multiple alternate asset management, etc. are looking to pick up 49% stake in BOB Financial Solutions, which is the credit card arm of Bank of Baroda. So on account of that, that stock might continue to be in focus. And of course, Kunal is recommending that stock, looking at the chart patterns as well. But Nooresh, what about you? What are the stocks that you would like to recommend this morning?
So first is the Biocon Axis Bank. The stock has finally given that closing above the 875 mark, which was the recent swing highs. Clearly showing a breakout in the short term. I would expect it to ideally go towards a new all-time high. On the longer term charts, 800, 820 was the last breakout point. We retested that breakout in the current correction. So the retest is done, and now it starts taking the leadership like it had taken in the previous last 10 to 12 months. So like Axis Bank with a target price of 950 in the short term, stop loss at 860. Second is a buy on Balrampur Chini. Now the stock has been consolidating around that 400 to 420 range for the last couple of weeks. Consolidation near the last breakout point. The last range for the last 8 to 10 months is from 360 to 420. Sustaining above 420 opens up a move towards 480 levels. Expecting a breakout in the near term, a stop loss at 405 and a target price of 480 in the short term.
All right, there you have it. Those are your top trading recommendations being flagged off by our charters. Let's move right on then, and we've got an ET Now exclusive right at the get-go. We're learning actually from reliable sources that the JSW Group is in talks to pick up stake in MG Motors. Let's understand a little bit more about this latest development. My colleague Ajay Sharma joins in with all the details. Ajay, what exactly are you picking up on this exclusive story?
Well, that's correct. We are gathering from our sources that JSW Group is actually in advanced stages of discussions to pick up a stake in MG Motor India. They are likely to pick up a stake which is just under 25%. In fact, they are also in talks with BYD India for business tie-up or some kind of a transaction. But compared to BYD, the stages of negotiation are much more advanced with MG Motor India. The idea here, what we understand is that JSW Group is very keen on EV business, and they have been on the public platform to announce that they are keen to scale up four-wheeler EVs. And by this transaction, they will gain access to technology. So EV technology is something which they are eyeing. We understand from our sources that MG Motor India business is being valued at closer to $3 billion. And whatever funds which will be raised under 25%, a couple of thousand crores will be used by MG Motor India in its expansion plans. And it is all known that EV, models of MG Motor India are doing very well. They have very advanced technology. So that is what JSW Group is very keen on actually learning and getting associated with via this particular transaction. So we reached out to JSW Group regarding this story of ours, and they declined to comment around this. And we also reached out and sent messages to MG Motor India MD, but we did not get any response. But we understand that these discussions are happening, and a deal is likely to be happening and being announced in the next 1 to 2 months.
Okay, so there we have it. That's the latest news coming in. They're going to utilize these funds for expansion purposes. It's going to be a deal that could potentially be completed within the next 1 to 2 months. Thanks very much, Ajay, for those details. In fact, we also connected with Mahantesh Sabaral to understand the implication of what this deal could mean. Let's hear him out.
So there are the only synergies that I can think of as far as JSW is concerned is that there are major business being steel business. The automobiles is something which will consume a lot of steel. That apart, JSW Ventures, which is into making small investments, has taken bits and pieces of $2 million, $3 million kind of investments in startups, EV kind of startups, to something in the e-commerce space related to cars and etc. But I really doubt whether they have the capacity and wherewithal to run a full-fledged kind of automobile company, even from a strategic investment perspective, not really from a 100% control perspective. That seems to be a bit surprising coming from such a steel company who themselves have a large capex plan.
IndusInd Bank declared its numbers, but the conference call happened post-market hours, and of course, brokerages also came in either late last night or today morning. Sharad has been scanning through what new came out of the con call, as well as what are the latest as far as brokerages on IndusInd is concerned.
Well, yes, in focus we are having IndusInd Bank, and there were important con call takeaways which we'll discuss, and the management is targeting almost 18 to 20% loan growth in FY24, and do remember the earlier guidance was between 20 to 25%. Apart from this, we look at a 20% CAGR in the loan growth over the next 3 to 5 years. And NIMs are expected to come in the range between 4.25 to 4.35% versus the earlier guidance of 4.15% to 4.25%. Now, the bank expects to deliver a return on assets of 1.9 to 2.2%, while the ratio of PPO versus assets is expected to come in between 5.25 to 5.75% against the 5.7% current numbers. Now, apart from this, also the used commercial vehicle and the affordable housing finance will be the likely key growth drivers going ahead for the bank, and also they're expecting that the home loan book will expand and go up to almost 15,000 crore rupees, and of course the affluent banking segment, that is expected to double. But now let's look at what the brokerage has been talking about. And firstly, Macquarie has maintained an outperform rating with a target price of 1,510 rupees per share. They have stated that the price to book value of almost FY25 at 1.2 times looks at a long-term attractive levels. Apart from this, also JP Morgan has stated that a strong growth has been there in the earnings, but the asset quality has actually slipped, and the bank is expecting slippages to moderate in the first quarter, which would be onwards to the less of the 2% mark. And lastly, DAM Capital is there, where they have maintained a buy rating with a target price of 1,510 rupees per share.
Okay, so the stock had slipped a bit yesterday. Perhaps the reason was the gross slippages coming in higher than what the street expected. Maybe we'll see a bit of reversal today. In fact, on that note, let's listen into the management as well of IndusInd Bank.
Indian economy remains a bright spot in otherwise weak global economic outlook. Overall, for the full year, credit growth accelerated across the board to 15% from 9.6% in financial year 22. Outpacing deposit growth of 9.6% with incremental CD ratio rising over 100%. Amidst the bank failures in the US, the Indian banking system remains sound and healthy, with strong capital and liquidity positions, improving asset quality, better provision coverage, along with improved profitability. Coming to the bank-specific development, our execution in PC5 and for the quarter has been in line with our communications during the year. Deposits had healthy momentum. Overall deposit growth was 15% year-on-year and 3% quarter-on-quarter. The retail deposit momentum continued with 4% quarter-on-quarter growth, with 43% of the deposit coming as per Basel III LCR norms in retail.
All right, that's IndusInd Bank for you. We'll keep a close eye on that stock in trade today as well, post the con call commentary and the management speaking. Moving right on then, Poonawalla Fincorp is also going to be in focus. CRISIL has upgraded the company's long-term rating to AAA stable. This comes in a few months after a big upgrade from CARE. Let's understand what the implications are. Vamakshi joins in. And Vamakshi, how is this going to aid the bank's borrowing ability?
While Poonawalla Fincorp is in focus after CRISIL has upgraded the rating for the long-term debt as well as bank facilities to CRISIL AAA stable. Now earlier on September 30th, 2022, we did see that CARE Ratings had also upgraded the long-term rating to CARE AAA stable. Now there are some other NBFCs with the AAA rating in this space, which includes the like of Sundaram Finance, M&M Financial, SBI Cards, Bajaj Finance as well as HDFC. Now it is important to understand how an improvement in credit ratings actually impacts the cost of borrowings for these NBFCs. Now for Poonawalla Fincorp, it allowed the company to get most of their banking loans repriced at a lower rate. It also enabled the company to tap diversified sources of borrowing, which in turn led to a marked improvement in its liability franchise. And not just that, the cost of borrowings for this counter has also significantly fallen. In Q2 of FY22, the cost of borrowing stood at 9.1%, and in that same quarter, the company's credit rating was upgraded by 2 notches by CARE. In the third quarter, we did see that CRISIL assigned a AA plus stable credit rating, wherein the cost of borrowings fell to 8%. But after that, we did see repo rate hikes come in, and despite that, the company's cost of borrowings fell to a low of nearly 7% in the first quarter of this financial year. After that, despite a nearly 135 basis point hike that came in Q2 and Q3, the cost of borrowings had only gone up by around 50 basis points for Poonawalla Fincorp, standing at 7.5%. So when we look at the cost of borrowings, they've declined by nearly 160 basis points since Q2 of FY22, and with that, Poonawalla Fincorp has one of the lowest cost of borrowings in the NBFC cohort. So largely, when we're looking at Poonawalla Fincorp, it is in focus on the back of that credit rating upgrade that has come in.
Pharma will be in focus, especially due to the M&A. IPCA has gone ahead and acquired controlling stake as far as Unichem Labs is concerned. Shrishti is now with us to tell us about this 33% stake in Unichem as well as the controlling stake that IPCA company has acquired.
Well, yes, a big news coming in from the pharma space, wherein two Indian pharma companies are in focus, as IPCA Lab is eyeing to have a majority stake in Unichem Labs, and they have already announced a deal of acquiring 33% stake in Unichem Labs. Both of these companies, if we see, are export oriented. But firstly, let's talk about the deal. And IPCA Labs is acquiring 33% of the stake from the promoter, wherein Dr. Amrut Modi, who holds around 46% of the stake in the company, is offloading 33% of that at a price of 440 rupees a piece, which is 13% premium to the last closing price. And the other 26% IPCA Lab will be coming up with an open offer. That open offer price is also 440 rupees, and that will translate into an overall acquisition cost of close to 1800 to 1900 crores. Now, talking about the deal value, then this is valued at 2.5 times of the sales. And do remember that Unichem is a net cash company. This was about the deal. When it comes to the synergies, then as we know, both of these companies are export oriented. While Unichem Labs has a major presence in the US, drives 60% of their revenue from the US markets, while IPCA has the majority chunk coming in from the European market. So definitely this deal is seen to be opening the gates for IPCA when it comes to the US markets. And not just that, the product range of both of these companies also complement each other. So a synergy benefit coming in on that front. But when it comes to the analyst stake, then they see not just access to the US markets, but FDA approved facility is also a thumbs up for acquiring Unichem Labs. As API raw material inflation settles, then Unichem margins are expected to expand, but this could drag the IPCA Labs margins in the near term. And lastly, this deal appears to be prima facie on the higher side of the valuation is what they believe, but that is the big news coming in, wherein IPCA Labs is eyeing a majority stake in Unichem Labs. Back to you.
Okay, thank you, Shrishti, for that. But Pankaj, what do you make of this deal? Because as Shrishti was also pointing out, valuation is at 14% premium to the current market price of Unichem as well. Product profile-wise, does it match, and what are analysts saying?
So first thing, the management has not spoken to anyone. There is a con call at 4 p.m. today, so a lot of questions will need to be answered. The important thing is that, what essentially they get, because Unichem, the problem is not the sales, it's the margin profile that they have, and that is something which I think the street is worried about, that, what sort of operational loss it could make. Yes, it does give them an entry into the US market, but, IPCA has not had a great experience in the US market, so they are not present over there. So what is their strategy to get back into that market, or what essentially happens for that? Are they only acquiring the company for their manufacturing capability and to, take further capabilities out of their manufacturing site? So that is something which one has to watch out for. Prima facie on the price to sales front is expensive than some of the other US listed generic companies, and that's why it'll be interesting to see how the stock reacts.
Okay, so a lot of questions that the management will have to answer, but 4 p.m. is the con call, and you can trust CT now to get you the latest from that con call and the updates as well. But talking about the primary market action, let's go back to Shrishti, because the IPO for Mankind Pharma is opening today. The street is quite excited for this one, but Shrishti, as far as valuation is concerned and peer comparison is concerned, how does the company stack up?
Well, yes, Mankind Pharma opens today, and that will be open till 27th of April. And after a long time in the pharma space, this particular IPO is coming. So a lot of investors are looking out for it. When it comes to the IPO size. It is at 4,326 crores, which is a completely offer for sale. Promoters and investors offloading their stake. Coming to the Mankind Pharma dominance in the Indian markets, they drive 97% of their revenue from India, and not just that, second largest in terms of the sales volume as per FY22 stats. When it comes to the valuation, with this particular IPO is coming at not looking that expensive, trading at 29 times 1 year forward PE, which is a little bit expensive when compared to the Nifty Pharma, but rest of the peers from the large cap space not seen to be that expensive as well. But when this particular company is being listed at the higher end of the price band, which is now at 1,028 to 1,080 rupees, this will be the 8th largest Indian pharma company as per the market cap, having market cap over 43,200 crores. So all eyes on Mankind Pharma.
Oh yes, indeed. We'll be watching out for that closely. And in an earlier interaction as well, Ajay caught up with the company's VC and MD, Rajiv Janeja, to understand the outlook post the listing.
In chronic side, our contribution is 34%. We have good contribution in consumer side as well. And as I said, our focus is towards chronic side. Our focus is towards consumer side. And you can see yourself in the shape of Manforce, in the shape of Praga News, you can see Gasofast, you can see Acne Star, you can see Health OK. One after another, our products are making some kind of a mark in the industry.
All right, that's the latest on Mankind Pharma. Time for a quick break, and as we do that, hear it out then from Dipan Mehta, who shares his outlook and opportunities within the pharma sector.
Market and investors generally are very favorable towards consumer-oriented companies, and if you look at the pharma space, I think going forward, the best opportunities are going to be in the domestic market for companies which have got strong brands, distribution network, and feet on the ground to sell their branded products to the doctors, the medical representatives. And the opportunity overseas is gradually diminishing. It's getting more and more commoditized, not only in US generics market, but globally as well. So given this kind of trends and scenario, I think Mankind Pharma, which is a homegrown, largely domestic-oriented company, should be definitely subscribed to. Question is whether you will get an allotment or not because of the heavy oversubscription. But from retail investor perspective, it is a good opportunity, and perhaps you could even add some stock post-listing. But from a professional investor's viewpoint, I think one needs to wait and watch for 2-3 quarters. Let the valuation settle down and then perhaps take a more informed decision.
Welcome back. Let's get in our first guest on the show. Amnish Agarwal now joins us. Amnish, what do you make of the recent rally as far as FMCG pack is concerned? Do you think after 4 years of complete flat move from the larger names, it's time to look into these consumption plays?
You see, if you look at, say, last 3-4 years, whether you look at HUL, whether you look at ITC, some of the players, they had not moved at all. And particularly ITC, I think it was because of more your taxation and other structural issues, I think, which are now getting more or less sorted out. Because last 3 years, we had not seen any increase in your taxation meaningfully. So the stock has actually come up, it has rallied, other segments are also doing well. And we believe that there is still room for an upside. Our target price is close to 440 rupees. And I think the kind of momentum we have seen in the cigarette business in the past few quarters, if the next couple of quarters are good, then we could see if the next couple of quarters are also good, we could see the momentum continuing in ITC. Now, as far as HUL is concerned, I think the rural demand has been tepid. The profit growth has suffered. What works in favor of HUL currently is that their gross margins are down by nearly 6 to 7% from the peak. So while the value growth might not be there in the near term, your margin expansion should happen. But at the same time, we are cautious on the overall demand and the rural demand, given your risk of El Nino and the consequent increase in inflation, because that can actually delay the recovery as far as the rural demand and in particular and general demand is concerned. So to that extent, I would say that Both these stocks can give you moderate returns from here, but definitely the momentum currently seems to be more in favor of ITC than HUL.
Okay, so prefer ITC versus HUL at this point of time. Amnish, a lot of buzz around the pharma sector as well, and of course the flashes for you at the bottom of the screen, wherein Serum as well as Biocon have decided to restructure their earlier equity deal of 2021, and as per the new arrangement, both the companies will see an equity investment in BBL to the tune of around $300 million, and this will provide BBL the additional product offerings for global markets as well. So prima facie, it looks like a bit of a positive coming in for Biocon Biologics as well. We'll try and analyze that in detail. But before that, Amnish, your take as far as how the pharma sector is placed at this point of time, and which would be the top recommendations?
You see, pharma sector has been on the sidelines from the past, I would say, few quarters now. Mainly because post-COVID, we had seen very sharp recovery in the sector and profitability has also zoomed. Now with the margins also normalizing, the sector has practically not gone anywhere in the last 12 months or so. Now we have seen yesterday IPCA and Unicum coming together announcing a deal. So I think there is some M&A activity which is happening and which might happen in the sector. Broadly, we are more positive on the broader healthcare, which includes hospitals, and we are not that gung-ho on the pharma names because of the lingering uncertainty which continues to come from the US FDA standards also. But if one wants to go into the pharma space, then Sun Pharma and JB Chemicals are the two stocks which we are preferring at this point of time.
Okay, meantime, Amnish, it's a result-heavy day as well. You've got a whole host of numbers that the street is anticipating, and among those, you've got Tata Consumer, Nestle, as well as Bajaj Auto. If we were to watch out for Bajaj Auto in specific, how are you looking at the outlook when it comes to the company's margins? What are you penciling in by way of export growth, and what do you think the street wants to look at closely?
You see, the main thing is that if you look at, say, Bajaj Auto or any of these two-wheeler names in particular, I think the past couple of months or couple of quarters, they have not been that encouraging. But having said that, I think we are, I would say, not very gung-ho on the two-wheeler names as of now, because we believe that two-wheeler is a space which is going to see maximum disruption from the EV. And to be a very big player in the, you can say, big success and to give a very strong returns from here, you need to be a very strong player in EV, which is not there in the case of Bajaj Auto. Now, as far as your export business and margins are concerned, I think the margins overall, because of the softer commodity prices, they have been coming up, but the export demand also remains, I would say, more or less mixed. So Bajaj Auto, as of now, is more like a hold kind of a stock for us. If you ask me, if you want to really play two-wheelers in terms of any expected increase in the demand from rural India in the coming 3 to 6 months, then Hero would be a better bet given the lower valuations, as well as the fact that the stock has not gone anywhere from quite some time.
Right. Also, let's hear out Sanjeev Bhasin. We spoke to him earlier regarding his top bets in the Indian markets at this point of time.
Who thought DLF and Godrej were beaten down to pulp? They'll be up 40% in a month. If you recollect, closer to January, we had given those as two of our topics. Now coming to numbers, ICICI numbers are superb. I mean, look at the gross formation, look at the lending, look at the cost of money, look at the NIMs. I think ICICI is going to 5 figures in the next maybe 2 weeks. There's no question about that. There are no two ways that India is going to outperform, and I'm very, very optimistic. By May, we should be closer to 18,500 on the index. And more than that, stock-specific outperformance will continue.
Okay, so that was about ICICI Bank and how Mr. Bhasin is quite bullish, hoping to hit the 4-digit mark in the next 2 weeks itself. But talking about some of the other counters which will be in focus today, Persistent Systems reported its numbers as well. It's a decent set coming in because the constant currency growth came in at 3.5%. The dollar revenue growth was around 3.9%. The good news was that the top client contribution has actually improved over the last 2 to 3 quarters. We had seen that the top client contribution was getting narrower, so that has come back. And the deal wins are also quite steady at around $400 million. But Amnish, what's the best way to approach IT at this point of time? Because clearly it's the large cap IT which is disappointed, but whether it's Cyient, whether it's Mastech or even Persistent today, they have managed to do better. Is it only a lag effect or mid caps are likely to do better than large caps?
Okay, you see, IT structurally we are very positive on this sector because the salience of IT and the importance of IT in each and every activity is only going to increase in the longer term. Now, as far as mid caps are concerned, if you can recall, maybe say 12 to 15 months back, the valuation of mid cap IT had actually run much ahead of the large cap IT stocks at that point of time. Now, the performance of say mid cap IT companies, for example, if you are talking about say Cyient is more into, you can say, very niche segment, and particularly the segment of engineering design services, we are very positive on that segment. But when it comes to, you can say, the other IT companies, yes, Infosys has disappointed, TCS was okay, and now the persistence, as you say, has been also reasonably good. So I think it is actually the time to look at IT stocks, because the stocks are beaten down. They have come up from very high valuation which they used to command say 12 to 15 months back. And I believe that this is only a transitory phase. The Indian IT stocks and the you can say growth rates will bounce back, and all the good IT companies, I think at the current valuations or maybe in the next 2 to 3 months, it will be a very good time to accumulate IT stocks.
Okay, meantime, Amnish, just curious, I don't know if you track Z Entertainment within the media space, but after a fairly long time of the merger talks being initiated, it seems like, finally there's light at the end of the tunnel with the talks with creditors to close the merger now emerging. Your view on Z Entertainment and what this merger could potentially mean as a key catalyst?
You see, the main thing is that all the hurdles which were there in the merger of Z, they are slowly and slowly going off. Now, the merger of Z and Sony will create like a media behemoth which will actually be competing with Star head on. And however, I think what it gives to the investors is much more transparency, much more credibility, because once Sony comes in, people will expect the balance sheet to be much better shape than what it has been historically. So that calls for some sort of a positive view and re-rating for the stock. Having said that, if you look globally also and in India also, in the next 5 to 7 years, there is likely to be a significant transition which will happen in the media business or the entertainment business from the broadcasters to the OTT platform. So in the long term, it will depend upon how Z5 and Sony live and the entire ecosystem of this OTT based, you can say, presence of the company plays out. However, if you look at this merger in particular, this merger is positive and the risk reward in the stock remains favorable. And I think over a period of time, if they gain on the OTT side, then there is a scope for making decent money in the stock.
Okay, decent money could be made on a stock like Z Entertainment at this point of time. But let me go across to Kunal and get his view regarding a couple of these counters which will be in focus today. Kunal, Z Entertainment, Persistent System and ICICI Bank.
So, bullish on ICICI Bank, not too much bullish or have a positive bias on Z Entertainment. I think that stock has been an underperformer. So, starting off with ICICI Bank, that stock, so it went into the results with the negative kind of a price action. The last 4 or 5 days, except for yesterday, the stock went to a mild correction from 920 to I think 880, 885, where the stock closed on Friday previous week. And yesterday you saw a mild uptake coming back about that 900 mark. So I believe the stock should see a strong follow-through price action, if not today, tomorrow, but then at least over the next couple of weeks, the stock could see a strong up move. Coming back towards 925, 930 could be a nominal target for ICICI Bank over the near term. Z Entertainment, I would be a bit skeptical because of the kind of price action the stock has seen. No major kind of price action for Z, and the stock has been absolutely sideways.
Right, let's get across a very important management now. Kiran Mazumdar-Shaw of Biocon is now with us. Interesting news which we just told you regarding the pact with Serum, or the new pact with Serum, which involves an additional $150 million of investment by Serum into Biocon Biologics. Kiran, thanks so much for taking out time for us. Could you just talk to us about this deal? Earlier it was happening via a loan, but now the company has decided to convert it into equity.
Yeah, I think Serum is very keen to have a stake in BBL or Biocon Biologics, and of course they were awaiting their court approval, NCLT approval for the original deal that we had struck with them. But since the long stop date had expired, they decided that they would actually convert their $150 million loan into equity. And, we would restructure the original thought process.
So, ma'am, as per the earlier stake, 15% was going to come through them for $150 million of a backward integration. Now, with 300 million, what stake comes in? That's not mentioned in the press release.
No, I think originally the 15% stake was tied to vaccines. Now this stake is a clean deal in terms of investment. So I think the average investment, I think that level that Serum will basically be investing at is at $6 billion.
$6 billion.
Yeah.
Right. So the earlier deal was about $4 billion, or the earlier valuation was 4. So it's now been upticked to 6 overall. That's because of the time and, of course, the progress that the company has made.
Yes, but I don't think you should link the two, because the first deal was struck many, many years ago, if you remember, 2 years ago. And this deal is now announced as the clean stake private equity investment. So I would not really link the two in that sense. But yes, the valuation is at 6 billion.
Kiran, hi, this is Anisha also joining into the conversation. Will Serum also be participating in some way in terms of the management of the BBL business, because they're keen to have a stake? Will they be participating with management and operations as well?
No, there was no understanding to have operational involvement, but we had offered a board seat, and that will remain, and it is for Serum to exercise that offer.
Right. Ma'am, could you also just talk to us about the new arrangement regarding 100 million vaccines that has been mentioned in the press release? What does it essentially mean? Because I understand earlier also you all were going to get rights. Does this include much more than what was there earlier?
No, actually, if you remember, the original deal was linked to 100 million doses of vaccine. So that access to 100 million doses of vaccines remains. Obviously, the access to vaccines is not just about COVID vaccines, which, as you know, is waning in terms of demand, but it's about other vaccines that are in their portfolio, both present and future. And I think that's what we will still have access to in terms of commercializing such vaccines.
Kiran, what would these funds be used for, the additional funds which are coming in, and should we expect more such rounds of fundraising or investment by Serum going forward into the company?
Well, as you know, the acquisition debt obviously gets addressed through equity raise. And this is an important equity raise because it means that Serum would have invested $300 million into Biocon Biologics. And we have, already announced the Kotak, fundraise. So we will be looking at additional fundraisers to basically further reduce the acquisition debt. But, we will do it in a very thoughtful way so that it doesn't really, impact us in terms of, the overall equity valuations and things like that. So I think that's what we are looking at.
Kiran, with respect to the debt as well, any target in mind as to what you want to reduce it to? What's the timeline?
Look, right now we are very comfortable in terms of servicing our debt, but we would like to reduce the debt, to a slightly lower level, so that it gives us an absolute comfort level in terms of our ability to generate much higher EBITDA.
Can you just give us a sense, Kiran, as to what that would be in terms of generating higher EBITDA, what you're targeting?
Well, right now we have an EBITDA that comfortably services debt, but as you know, it's always prudent to be able to generate extra EBITDA for other opportunities or to expand our R&D pipeline even further. So I think that's the way we are looking at it, saying that it's okay, we are able to service the debt right now, but it would give us comfort if we had a little more, leg room to do more things.
Okay, and Kiran, could you just update us with respect to the new launches which are lined up for BBL, Humira as well as Espart, if I'm pronouncing it right? What's the pipeline looking like? What's the timeline for these approvals and launches?
Well, as you know, the adalimumab or the biosimilar Humira launch is being planned for July this year. And I think all eyes are waiting for that launch from us and others. So I think that's something which we are very, very focused on. As far as Aspart is concerned, we have submitted our responses to the US FDA. We're awaiting a response from them in terms of when the approval is likely to come through. So I think we don't have any optics on that as yet. But hopefully it will happen sooner than later.
Okay, Kiran, really appreciate you joining us today and talking to us about the restructured deal as to what's happening with Serum. So additional money coming in. There is a board seat which is offered, will help the company to pay down the debt as well. And as far as the launches is concerned, the timeline is pretty much as we were expecting earlier. Humira is expected in July of this year itself. So that was about Biocon. We'll see how the stock reacts, but it looks like a bit of a positive news coming in there. Let's complete the discussion on Biocon and go across to Nooresh as well to get a sense as to what the charts are suggesting on Biocon. Nooresh, your take?
So Biocon has been one of the stocks which has always disappointed in terms of price action. The stock has actually one of the only stocks which broke below 2020 lows in the pharma pack, and very few of the companies have actually broken those levels. So the stock is available at the same price as it was in the low of March 2020. So the worst seems to be over, given that the 5-6 year return for the stock is zero now. In the last 1 month, the stock has bounced back from 200 to 230 levels. The first indication of a clear change in trend would be if it can sustain above that 235 to 240 mark, which is the high for the last 3 months. If that happens, that would be an indication a short-term trend has changed, and one could go towards a meaningful move towards a 280, 300 levels. So for now, watching the stock has retested long-term support levels, and the worst seems to be over. But momentum will confirm once it can sustain about 235, 240.
All right, let's hear it out then from Hemang Jani. He shares his outlook on some of the interesting fundamental ideas.
Only pocket which is holding out well is to some extent banking, pharma, and a little bit of specialty chemicals. So I think it would make sense to go with some of these sectors, certain banks, particularly where the numbers are likely to be good, be it ICICI Bank, SBI. Specialty chemical, because of the China reopen, you're seeing some good positive traction. So Navin Fluorine is something that should do pretty okay. Pharma, after almost about 5 quarters, is showing a bit of a resilience. You'll see a 8-9% growth. A big IPO is being launched, after a long time. So I think pharma as a sector should do well, and we like maybe Cipla, Alchem. So I think these are the pockets where we would have a positive view.
Well, Kunal, do you believe that pharma index is coming out of a long drawn, I mean, it's a sector which was just forgotten and people were not talking about it, and now you're getting news flow every day, M&A, stake being upped in one of the large companies at a decently higher valuation, approvals coming through, a lot of plants are getting cleared by FDA. Do you think a lot of news flow is coming in?
Yeah, I think it's coming at the right time, I would say, because the pharma index has just started to show signs of a good spurt in the last 2-3 weeks. You had large cap names like Dr. Reddy, DV Slab also did recover quite well from that 2800 odd mark. Dr. Reddy at one point I think was just about on the verge of breaking past about that 5000 levels. So other than the likes of Sun Pharma and Cipla, which are actually not closer to their 52-week highs or even the life highs for themselves, you have the other performers or the other pharma stocks which are actually underperformers since the last 3-4 years. These stocks have made a good comeback. So I think it's a good addition that the pharma index is getting a lot more vibrant, devoid of the large cap names like Sun Pharma and Cipla. Now, from the overall pack, I would still believe that Dr. Reddy, DV Slab, as well as Glenmark and Zydus are the 4 names which have actually shown signs of very good strength, confirmation of breakout, volumes coming back, indicators being very strong. I'm not sure if Biocon could probably break past about that 250 level, which is a huge hurdle for the stock price. But if it happens, then even this stock could be probably added to the list. But yes, the pharma index is getting a lot more vibrant than what was maybe few quarters back or a couple of years back.
Okay, so that's the take as far as the pharma space is concerned. But of course, autos is another space that will be in focus. Bajaj Auto comes out with its earnings. Amnish, your take as far as Bajaj Auto is concerned, because exports have been, weak, and we know that. But the management is now saying it's bottomed out, and all eyes will be on the margin performance, right?
Yeah, see, margins, as I said earlier, they are likely to be good for all the auto companies because our raw materials have been benign and the YOY growths have been reasonably good. As far as export markets are concerned, I think in the near term it looks good because the base is favorable. But then you see, Bajaj Auto needs to be, I think, one thing which will work for the stock in the medium term. One is your three-wheeler space where they need to catch up, and the second is the EV because they are very weak player in scooters as such. So in terms of numbers, numbers should be okay. Exports outlook seems, I would say, relatively mixed. But as I said, that if you want to look at two-wheeler space, I think TVS and Eicher, they have been doing far better. And in terms of valuations, I think Hero is the cheapest stock to look at.
Amnish, also wanted your take regarding consumer durables, because today there's a news on Crompton Consumer wherein the leadership has changed. And secondly, there are updates coming in for Whirlpool as well, wherein the numbers for the global parent was announced and the Asian performance looked a tad bit weak. Given we're all talking about an improvement in the real estate cycle, would consumer durables follow, or the valuations are still expensive?
You see, consumer durable valuations have come off the highs because after first wave of COVID, the sector had seen massive re-rating. Now, if you look at, say, particularly Crompton Consumer, the Crompton Consumer stock in the last 12 to 15 months has been significantly derated because, particularly post Butterfly, there is some debt which came into the balance sheet. The numbers, they have not been that great. They faced competition in a couple of verticals of there, particularly in the pump segment. They have not been doing well, and lighting, they have not been that aggressive and major player in the past. So I think Crompton has got derated in the last 12 to 15 months, and now this management change which is happening, I think Crompton one needs to look at in a very different manner because this is a board-driven company and there is no promoter of the company per se. Now we were hearing from quite some time that you can say that the company is not working in I would say, in a singular manner. Now with the Butterfly merger also announced, I think a lot depends upon how the things go from here in terms of growth. Because Crompton, if you can recall, even a couple of years back, they had perhaps the best EBITDA margins in the industry. Now, for the stock to bounce back, I think it will take some time. We need to hear more from you can say, the new management, because Mr. Shantanu Khosla will also be now more like, you can say, he will be guiding you can say, operations. So it is more like a wait and watch for us as of now. Yes, the brands are strong, and the company has done a lot, particularly after the acquisition by Temasek and Advent. The way you can say, pushed up their margins, their go-to-market strategy, which was spearheaded by Mr. Shantanu Khosla and Mr. Matthew Job. Now let's see how the things pan out. But definitely, this is a stock which has suffered massively in the last year and a half. But definitely, there is very limited clarity as of now. Now, the second name which you talked about was Whirlpool. I think if you look at Whirlpool in particular, I would say that the company in general, and if you say your refrigerators or all the cooling products, including ACs, they have been suffering in the last year and a half because of the seasonality factors. Now, as far as the parent company is concerned, Asia is not a very big part for them. But having said that, Whirlpool in India has also not been doing that great. And I think now with the summer season picking up this year well, so there is a possibility of some bounce back happening as far as the fortunes are concerned. But definitely Whirlpool is not a leader as far as the refrigerator segment is concerned. So they had acquired Elica, which is a good business. But again, Whirlpool, I would say, is also on the sideline from quite some time. The stock has reacted from something like 2,800 of a peak. It's currently around 1,300 levels. However, I think the company needs to perform, the numbers have to come. Summer season raises some hopes, but there's a lot more delivery to come from the company before the stock can see any major re-rating to happen.
Okay, in the meantime, just tracking some of the interesting movers that we've seen in the last 1 week or so. This is on the Nifty 500, and looks like there's Rail Vikas, which has seen a pretty smart move on the chart. Something like a Raymond as well. That's been a buzz off late. We discussed that stock. IBREL Mastech has seen double-digit gains. Engineers India as well. Kunal, anything standing out on the charts?
Yeah, I think RVNL is something which is very interesting. The stock, so I remember in 2022 second half, the stock did exceptionally well, moving on from I think 27, 26 to at 1.80 plus levels in a matter of I think 3-4 months. Post that, the stock fell, or rather went into a correction from 80 levels to almost 55, 60 zone, and then now it's made a comeback about that 80 mark. So this could be a dramatic change of event for many of these railway stocks, as well as most of the stocks which had actually rallied in the second half of 2022, and these stocks had corrected in the first 2-3 months of 2023. So this generally gives a sense as well as an indication that there could be a bigger trend in the making, where these stocks have channeled the first up move a couple of quarters back, went to a correction, and now making a comeback again. This trend is here to sustain visibly for these stocks, and I would believe for the likes of RVNL, for example, we could now be aiming at a 3-digit mark, 100 plus levels for the stock over the near to medium term because of the way the stock has given that structural breakout.
Kunal, do you think Capex, High Railway, Capcoats, all of them are going into a structural up move? I mean, every time they see a correction, the correction is smaller than the rise.
Absolutely, Pankaj. So, there are two ways to look at it. One is that whether there is a synchronized price action. Yes, there is a synchronized price action. Starts from the large cap names like L&T, ABB, etc., and then trickles down to the other, mid cap end or the small cap end of the market. The other way to look at it is that how is the volume flow into these stocks. Now, on the way up, when the volumes are rising up significantly higher, we expect the trading volumes, the participation, the interest for the stock to be much more stronger. On the way down, when the stocks correct, consolidate or go into a sharper correction, whether the volumes ebb off or not, and that's exactly the pattern which we are spotting for these stocks. So even, for example, just a case like L&T, the stock went up higher to 2,300 levels, corrected back towards 2,200 mark. So on the way down, the volumes were significantly low as compared to on the way up. And I think putting all of those points together, yes, I would believe that there's a stronger theme which is in the making.
Okay, Amnish, before we let you go, top mid-cap ideas?
Okay, so in the mid-cap space, we have been quite positive on few of the QSR names, particularly Westlife is one name we have been very positive about. Then in other mid-cap ideas, you can look at VIP Industries, which has corrected from say 700, 750 odd rupees to current levels. Then in the building material space, you can look at say Prince Pipes. This is another name we are very, you can say, gung-ho about. And although the near-term uncertainty is there, but you can look at say names like, for example, Sumitomo or PI Industries on the agrochemical space. I think these are some of the, I would say, mid-cap names which we are very positive about.
All right, thanks so much for taking time out and joining in. Good to get those mid-cap bets and, of course, your views on the markets. What's happening with the pre-open rates this morning? We're scaling up, at least holding up above that 17,700 mark. There will be a lot of result reactions as well that we'll be watching out for in trade today, and that's the Nifty for you up about 0.5%. Mid-cap trades then. Nooresh, what's on your radar?
So, looking at IDFC First Bank, the stock has given a short-term breakout, and we are seeing good momentum in the whole mid-cap banking space after quite some time. The stock made three bottoms around 52, 53. This was the last breakout point for the stock, where it started a move in October 2021. A classical triangle breakout as well, good enough consolidation done. The longer-term charts also look very interesting. The stock was at 52 back in 2021 as well. Expecting a move towards 65 to 70 in the short to medium term. A stop loss to be kept at 56.
Kunal, get in your mid-cap call.
Well, that will be a buy on Union Bank. Again, another PSU banking stock which has shown signs of strength, recovery, breaking past about the 70 mark, closing about 73 levels yesterday. So it's a rest of buy, targets of 79, stop loss could be kept at 70.
All right. There you have it. That's what the chartists are picking out as their top mid-cap recommendations. Meantime, let's get in a view then on the charts. And Nooresh, curious about how you're looking at some of the auto stocks. Bajaj Auto, of course, will be in the spotlight today, but Maruti at around 8,460 levels. What's your view on M&M, etc.?
So Bajaj Auto has finally, I'll start off with Bajaj Auto first. It has finally come out of that huge range which it was there for the last 2 years. Every time the stock would come to that 4,000, 4,100 mark, it would pause out. Now, if you look at a little longer term, the all-time highs are around 43, 4,400. Now that has also been taken out. So the stock has finally taken leadership in the fact of making a new 52-week high, a new all-time high, which is not happening in a lot of auto names right now. So out here, any dips back to 4200 to 4100 would be a buying zone. Even at current levels, if one has a medium-term outlook, the stock looks very promising because this is a 2-year breakout, which could ideally have a target price of 5,000, 5,500 in the medium to long term. So it looks very interesting. Maruti, on the other hand, has gone sideways for the last almost 6 years now. So the stock was at 8,000, 9,000 levels back in 2017. And since then, every time the stock has come in as closer to that 4-digit mark, the stock has actually pulled back a lot more from this 10,000, as closer to 9,000 to 10,000 band. So not really promising as of now. It keeps making flip-flop moves. So not looking at Maruti. The other name which looks interesting in the auto pack is Tata Motors, which after 1.5 years of consolidation has started showing strength. It gave a recent breakout over the 450 mark. It has slowly moved up to 470, 480 levels. But I think it could eventually catch momentum and go towards 540 and maybe even cross that. So even at current levels, Tata Motors would be one of the top picks in the auto names, and on dips it would be Bajaj Auto.
Tata Motors and Bajaj Autos, those are the two counters to watch out for. The pre-open rates are just settling in, so let's take a look at some of the counters. Welspun India, there is a news flow that the company will consider buyback come April 27. So Welspun India, on account of that, is 5% higher in pre-open. You also have Biocon on account of the news flow that we just talked about. The restructured deal coming in with Serum at a valuation of 6 billion. So stock is reacting positively, 2.25%. On the losing side, let's pull up Ipca Labs, a cut of 4% to begin with, given the fact that the valuation of the deal is something that the street doesn't like. And then Crompton Consumer, wherein the leadership has changed. Mr. Ghosh as well as Mr. Job are stepping out. So that's the reason that stock is seeing a cut of around 5%. But you also have IndusInd Bank, which will continue to be in focus today. So apart from the earnings, this is an exclusive that we are bringing you. And that suggests that the bank is planning to enter into the mutual fund, insurance as well as broking business as well. And we learn from sources that the bank will soon apply for licenses to RBI, IRDI and other regulators for the same. My colleague Ankur is joining us with those details. Ankur.
Yes, IndusInd Bank wants to go beyond banking, and what we have understood through sources is that the bank wants to venture into mutual fund business, insurance business as well as broking business. Now for all these businesses you need to apply for licenses, and sources have indicated that the process of applying the licenses will begin in few days. In fact, the first application is likely to be sent to Reserve Bank of India in few days, and after that SEBI, IRDI and other regulators are likely to be reached out, so that first step of obtaining the license can be done, and after that, as when the approvals come, these businesses will be started. Apart from that, the bank also has plan of starting its own digital bank named Indi, and in that the bank feels that after these licenses are obtained, there will be a greater platform to expand these businesses. However, it all depends on the approvals when it comes, and it is likely to take 1 or 2 years for the bank.
Much for those details. Let's get a move on, and here's the other set of headlines that we're tracking. In the latest on layoffs, Disney is going to begin a second wave of layoffs involving thousands of roles as part of their efforts to eliminate as many as 7,000 positions and save close to $5.5 billion in costs. The job cuts include bringing the total number of jobs culled to 4,000 and are said to be across entertainment, ESPN, Disney parks, experiences and products. Meantime, luxury goods giant Louis Vuitton has become the first European company to surpass $500 billion in market value thanks to a booming demand for luxury goods in China and Euro. The milestone comes 2 weeks after they joined the list of the world's 10 biggest companies, largely led by a surge in the first quarter sales. And in the US, the right-wing prime time host Tucker Carlson has decided to part ways with Fox News. The announcement comes just days after the parent company settled a $787 million defamation lawsuit. Carlson's program, Tucker Carlson Tonight, has been one of the long-standing top-rated shows on Fox News. And after months of speculation, reports suggest that US President Joe Biden is finally expected to announce his second term of bid. Neither the White House nor the president himself have confirmed this, but multiple media reports citing sources saying that a potential announcement is expected as early as today.
Meantime, India launches Operation Kaveri to evacuate stranded Indian citizens from the war-struck Sudan. As per records, nearly 3,000 Indians were stuck in various parts of Sudan, including the capital Khartoum. Sharing pictures of the rescue operation, External Affairs Minister S. Jaishankar tweeted that about 500 Indians have reached Port Sudan and more are on the way. Back home, Prime Minister Modi is all set to flag off Kochi's very first water metro later today. The project is expected to revolutionize transportation in the country. Kochi sits amid numerous small islands, and the water metro's main objective would be to connect as many as 10 island communities from city to the mainland as a means to shorten the travel time as well as provide a cost-effective transportation. In the world of sports, however, Delhi Capitals have managed to beat Sunrisers Hyderabad by 7 runs while chasing 145 runs. A low-scoring thriller between the two sides wherein Delhi managed to steer the game in their favour using their bowling might as well as restricting the Sunrisers to a meagre 137 runs. This is now Delhi's second consecutive win and Hyderabad's third consecutive loss.
All right, let's find out what the index calls are as well this Tuesday morning. What is it that our chartists are advising given the kind of breakout that we saw yesterday? A unanimous hold from both Kunal as well as Nooresh. And on the Nifty Bank Index, a quick check-in as to what our chartists have advocated. And that should just come up for you on your screen. It's a buy recommendation on the Nifty, and it's actually a buy recommendation on the Nifty Bank as well as the Nifty from Kunal, and Nooresh says buy on dips. Kunal, you want to just clarify that on the Nifty index, your call?
Yeah, so that'll be a buy on the index. So, as we were discussing, yesterday as well, that the indices have paused for a bit, and I think it's good time where the risk reward would be very, very attractive to initiate a fresh long on the index. 17,850 on the spot would be a near-term target. So I would expect at least another 150 points from yesterday's closing as a nominal target for the index over the near term.
Kunal, can you just talk about Ipca Labs? It's not a very frequently traded counter, but it's a very well institutionally tracked counter. Pre-open suggests a 3.5% decline. There is acquisition news, but purely on the charts, pre-open, what do you make of it?
Well, nothing much in terms of the chart structure other than that the stock has been trending down for last, I think, 2 years. 2021, the stock made a high of 1350. The very recent low for Ipca Lab was just around the 750, 760 mark from where the stock recovered. So, it's still trying to find its feet. The recovery is not strong enough. The volumes have not been great in this leg of uptrend for Ipca Lab. And more or less, the prices have not yet confirmed a swing breakout. So the swing breakout for Ipca Labs would be around 880 to 900 mark. That has not yet happened for the stock in this leg of an price uptrend. So when I put this, when I look at the charts, it just seems like the stock may take some bit of more time to recover. Ideally, these kind of charts should be traded once they confirm a swing breakout. And I think about the 880 or 900 mark is where I would believe that the tide would turn for Ipca Lab. But till then, the trend would be negative.
Okay, so that was about Ipca Lab. Just 50 seconds to go as far as the market opening is concerned. And for now, the market pre-open is suggesting that we are likely to open with a green tick. Yesterday, we had seen a solid surge of over 100 points as far as Nifty is concerned. We started off a bit slow, but since then, we picked up pace and ended just around that 17,750 thereabouts. Today, it seems we are likely to open higher. 17,761 is what we are watching out for. Of course, top of mind will be what's the reaction coming into IndusInd Bank commentary as well, because they talked about the next 3-year targets. They gave the loan book growth target for FY24 as well. Plus, we have earnings coming in today from the likes of Bajaj Auto, Tata Consumer, Nestle as well. So we'll watch out for that. Persistent Systems is another stock we'll watch out for on account of the earnings that have been reported. A decent set coming in. So that's something that definitely Street will watch out for. Just 3 seconds left for the market open. So let's see which are the sectors and stocks that open with a bit of a green tick. For the market at this point of time, opening with a bit of a green tick, 17,750. The advanced decline ratio is firmly in favor favor of advances as we speak. So the broader market is looking quite excited, and Nifty Bank continues to gain momentum. 42,700 is where it is at. In terms of the top gainers, IndusInd Bank is up 1.4%. You also have Tata Consumers as well as Nestle and Bajaj Auto in focus ahead of their earnings. So let's watch out for that. And within the broader markets, the stocks that need attention are the likes of Biocon, Crompton Consumer, Ipca Lab, UPL. Let's pull up all of these counters and see how they are tracking. Biocon, Ipca Labs, as well as Wellspun India. We also have Crompton Consumer, which is reacting to the bit of a news flow. So 7% cut coming in on account of the leadership change that has happened at Crompton. And Ipca Labs too has opened with a bit of a gap down. Sectorally speaking, it's PSU banking that continue to do the best, because Maharashtra Bank, Punjab Sind Bank, these are some of the counters which have opened up with a bit of a green tick. And on the losing side, it is IT, which is on the back foot, led by Persistent. Remember, the stock was high by around 3% yesterday. Today, it's opened with a cut of almost a mild 1% cut coming in on Persistent, because the numbers were pretty much factored in by the street. Other than that, not big movers, but yes, have to say, Avan, it's Crompton Consumer that deserves mention. And then, of course, the likes of Ipca Lab and Biocon. So pharma stocks continue to be in focus.
They absolutely do, but just at an index level, looks like we're again pretty tempered, at least above the 17,700 mark. Names like from the tech basket, as you said, are a little bit quiet in today's trading session, but on the Nifty 500, here's what stands out. Rail Vikas Nigam doing quite well, continuing its up move. By the way, IBREL, these are some of the buzzers that we've been flagging off. Biocon, as we highlighted, 1.5%. REC, CAT and Union Bank. Kunal, your first trade.
So that'll be SBI, the stock which we discussed extensively yesterday. Would suggest, in fact, recommend to clients as well. I think it's one of the strongest chart from the PSU banking stocks, and the way the stock has broken past above 550 looks extremely attractive.
Kunal, a quick word on Crompton as well. Would you be a buyer after a cut of 8%?
Not really. In fact, the stock has gone down to another 10, to total 10% down so far. So I'll wait out for the correction to settle out, and I think one should not be in too much hurry to buy the dips in such kind of a market, especially for such kind of stocks.
Kunal, same with Ipca, 7% down?
Yeah, same for Ipca as well.
Okay, Nooresh, what about the first trades that you are spotting?
So continued like IDFC Limited and IDFC First Bank, both are setting up for a breakout move, heading up higher from here. So looking at 90 on IDFC Limited and 65 on IDFC First Bank.
Okay, I just want to address the stock of Crompton Greaves before we welcome on board Sanjeev Prasad as well. Remember, Mr. Khosla has resigned from the post of MD. He's now been elevated to the level of Executive Vice Chairman, and Mr. Prameet Ghosh has come as the MD CEO. Remember, he has the backdrop of being an investment banker. He was also part of the board level as far as Crompton is concerned, but the street for now is not liking it. Remember, since the deal has happened with Butterfly Gandhimathi, we have seen that the stock has been fairly volatile, and now with this resignation coming in, the street is not taking it well. At least at this point of time, the stock is seeing a cut of almost 10%.